Charles Schwab Corporation is going to be acquiring TD Ameritrade. This is a story we first reported last week. TD Ameritrade is now naming Stephen Boyle as the interim president and CEO. They're suspending their CEO search because obviously this will be taken care of with this deal. Charles Schwab is going to be issuing 1.0837 shares for every TD Ameritrade share that's out there. We'll continue to keep an eye on this. Charles Schwab saying that Toronto Dominion Bank is going to be holding about 13% of a stake in the combined company. You can see right now Charles Schwab shares, which ran up last week on this news, are right now down by about 22 cents to 47.98, so maintaining basically the gains that they had seen last week on this when it was first announced. TD Ameritrade shares at this point indicated up by about 2.3%. That's a gain of $1.13 to 49.26 again after they saw big gains last week as well. Charles Schwab is saying that they see this deal being 15 to 20% accretive to the adjusted earnings per share in the third year of this deal.
Just Schwab, right? It's going to be called just Schwab.
They lose the branding. It sounds like that's what
E.F. Hutton.
The interesting thing, though, analysts have looked at this and said because they both have very strong trading platforms that you won't see as much of the accretion in terms of that. They'll probably keep both the Charles Schwab and the TD Ameritrade trading platforms operating because they don't overlap. There's some things the TD Ameritrade has, like options, for instance, a little bit stronger. Charles Schwab has a lot of things like people who will talk to you and guide you through some of these things. So because of that, they'll probably see, some analysts are speculating, around 40% in terms of the accretion that they can kind of combine and put these together with those consolidated.
Both platforms need to advertise separately on Swap Box. They need to ramp up.
That is expected to be where you will see some of the.
Oh, no. They got to double down on both platforms, too.
Are they saying anything about, I don't know if they disclosed it at this point, breakup fees?
I don't know. I have not seen that yet.
To me, the two issues that will be interesting: a breakup fee, whether you think
because
this actually
because I think
there's an antitrust issue, not so much on the consumer side, but potentially for all of the investment advisors out there. It really can. I mean, I think collectively they have like 60-70% of the business. What did you say?
Business networks are serious antitrust.
I think they're 1 in 3, so they are too.
I'm just suggesting. So there may be a look at that, and so you care about that issue. The other issue would be about deposits that used to stay at TD Bank. So TD Ameritrade used to run all their deposits into
Toronto Dominion.
Into Toronto Dominion. That was actually a huge fee generator for TD Bank. And so if you take those out, I assume Schwab is going to want to keep those deposits in their own bank effectively, what that does to TD long term. So these are some of the questions that I think, at least in the banking world, they're probably still outstanding.